Today's Thursday, February 16th, and it's 11:47 p.m. Eastern Time. This is a trade review of a position I'm currently holding involving the micro crude oil April 2023 futures contract. And as of the time of this recording, the oil futures is currently trading or quoted at 77 spot 93. And since trading started this evening at 6 o'clock, the oil futures is down 81 cents. The current contract is the /MCLJ23. This contract will be expiring in 32 days and then subsequently rolling into the May contracts. The current March contract will be expiring tomorrow morning, so this is going to be a zero at that point. So what I'm showing here is this position right here. This green flag is showing that I do have a position for the option contracts, specifically the February 23rd, which will be expiring in 8 days, which is essentially next Friday. And with that trade is specific to this contract right here, which is the $79.25 strike price. And I'm on the put side. So a put is a bearish bias trade, which means I'm anticipating that price for oil will continue falling. And with that, I only picked up one contract. I had another position, the 78.5, but I did just close that a little while ago. And this is the only option contract I have open right now. And the reason why I closed this contract is, again, because this contract expires tomorrow. And that, considering I'm not going to be awake to manage the trade, I thought I'd just close it out tonight before I go to bed, which is what I did. And this is a second contract, which I bought into last night, around this time last night. And my entry price was at $1.79 when oil was trading at that amount. For the premium of the contract, which is now currently quoted at $2.29 or $229 per contract. And since entering the trade is up $50 for this option contract. So again, I have another 8 days remaining. So the other position I'm holding isn't the actual option, but actual futures contract, which I shorted this evening, literally maybe a few minutes ago, maybe 20 minutes ago. I shorted the first contract at 11:23, and then 2 minutes later, I shorted a second contract. Fortunately, it was at the same spot price that was quoted. I mean, you can see that each contract is pulling in $3 each for the current profit of $6. So with the option, for the futures contract, each tick move up or down is equal to $1. So the multiplier is 2. So because of the two contracts. So that is the current status of the trade. And to go back real quickly, this contract that I closed at 78.5, that was a profit of $76. So not too bad. So here's my thesis for being bearish on oil. So from my perspective, this was the overall market structure. Price was trending to the upside. And then from this point on, where this yellow band is acting as resistance, this bottom yellow band is acting as support. And when price was running up, it couldn't really go any higher because this resistance was, I guess, a valid resistance level because price did run up, pierces it, but was not able to continue much higher. Here was another attempt to go further, but was quickly rejected the following 2-hour candlestick. So this is at the 2-hour time frame. And we can see that price, even though it's trending to the upside, a majority of the time, it was spent really going sideways, right? So it was just ranging here. And I was anticipating that price was going to start falling out of this up channel to the point that price could start rolling over, possibly retesting the prior lows of $73. And I'm not saying that it's all going to happen in the next 12 to 36 hours, but it could play out that way. So the option contracts, this white line represents where I entered, and this green line represents where I need oil to be before crossing the expiration date, which is this vertical line right here, which is pegged to February 24th at 8:30 in the morning. So I need oil to really move towards the downside very quickly in such a short period of time. So that's the price range, or the target price I need oil to initially breach. The further lower it goes, the better for the premium. Now, this other line right here, this white horizontal line running across where it has a -2, this is just a visual representation as to where I shorted relative to the current 2-hour time frame. So this, I have a potential take profit target down here. So here I have a stop to close the trade out. If my assessment was incorrect and price reverses on me at any time during the life of this trade, it would close me out at a $66 loss, which is, I'm essentially risking $33 per contract on the stop side. So if I was wrong, if my assessment is correct and price continues fading towards the downside, this is an approximate win of a little over $100, maybe $120. I have the second contract open. It's going to be my runner. So if there's a strong move to the downside, then I would consider leaving this trade open, possibly once it retests this level down here. But that's another day for me to evaluate depending on the price action. So what I'm going to use just to have a gauge as to what price levels to consider is I'm using the high, or the opening high of $80.59 from this candlestick, and I'm going to use it for this low. So this low and this high will be my anchor points to the Fibonacci retracement tool or indicator. And this is just a ballpark, right? So here we can see that the 61.8% fib retracement, or the golden ratio, is pegged to 77.49. So I'm anticipating if price does come down this way, it might hold up as a strong support level, and we might see price consolidate and go sideways for a few days, similar to what happened over here, right? So when price was running up, it had a difficult time breaking above the 61.8% fib level. Eventually, when it did, it then ran directly smack into this upper resistance level where price just went sideways, right? And then when it came down, it ran right back up, but then at that point, it was held at support. So here we have another touch point for support, support, support. So this could be a strong support level based on past history. So this is an area I'll be looking to either maybe just close the trade out, because I really don't want to have an open trade going into an extended weekend, because Monday is a national holiday. So that's 3 days where if I keep this trade open and, for some reason the oil reverses during the weekend, I won't be able to close this trade out until the futures market starts trading again, either Sunday evening or Monday evening because of the holiday, So I just want to mitigate the risk and possibly just close this trade out sometime tomorrow afternoon. But again, going back to this, I'm looking at 77.49 as a potential area where price may have a difficult time breaking below it. If it does, then I will definitely close the trade out Friday, as early as Friday morning, maybe midday. Otherwise, I would look at the 50% retracement, which is 76.52. I have my price level here because, again, heading into the overnight session, volatility could kick in where we can spike all the way down. So I, just, try and get as much profit out of this trade as best as I can. So that's the current status for both the option trade as well as the short on the futures. So if I click on active trader, the trade is now up $14. So my entry price is 77.95, which is, I should have marked this up as 77.95. Let me go ahead and do that now. So there should be 77.95 right there. And yeah, so for the purpose of time, I'll pause it here and I'll pick it up either in sometime tomorrow morning or sometime mid-afternoon. Until then, more to follow. So quick update, today's Friday, February 17th, and it's 6:50 a.m. in the morning. So see, as anticipated, oil did drop significantly last night, and price is now at the 50% fib level, which is greater than or less than 76.52. Oil is currently trading at $76.36. So before going to bed last night, I did move this limit order below the 38.2%. And now the option contract is also profitable because price is now below this 77.46 benchmark right here. So if I jump on the trade tab, the overall position in oil is up $484 as of the time of this recording, of which 320 is on the futures and 166 is in the option contract. So off to a good start, but I will still track this heading into today's close. So I'll need to make some decisions later this afternoon heading into an extended weekend. So for the purpose of time, I'll pause it again and I'll pick it up in a few hours. So here's another update. It's 11:54 a.m. So it's been a few minutes since the last update. I did get stopped out on the last two contracts earlier this morning. Unfortunately, I wasn't able to capture it, but I just did re-enter the trade. I shorted another two contracts, and those two contracts are up $68 as of the time of this recording. However, the prior two contracts were profitable. As you can see, there's a price discrepancy because the overall P&L for the day is a lot higher than the two contracts that I just jumped into. And these two contracts I shorted at 11:50, which was 5 minutes ago. So this is a whole new set of contracts that I just shorted. Switching over to the 2-hour time frame again, as you can see, let me zoom in a little bit. So price did run up, and I did get closed out at the 50% fib retracement level. And I got closed out when the stock market opened this morning. Everything just rallied and has since been pulling back. So during the pullback, I did re-enter the short, and that's the rationale for the entry. I am still in the option contract, the trade for the option contract, and I am anticipating a broader move to the downside heading into next week or towards the end of the month. So I may jump into another option contract, but I will wait till next week. If there's another move to the upside, that should bring the price down, and then I'll shop around for another option contract. However, for the futures, I think I'm going to stay in the trade after heading into today's close, because I don't know. It's still up in the air, but I'm starting to lean on keeping the two contracts or the futures trade to the downside going into next week. So if I open up Active Trader, so the two contracts is now up $74. So, and what I'll do is I will identify the stop limit. So in case there's another sharp reversal to the upside, I want to limit the loss and mitigate the risk. So I'll do that offline. And until the next update, more to follow. So it's been a few minutes, and I am out of the trade. I got wicked out. So this green candlestick closed me out. And fortunately, I was able to move my stop ahead of my entry price. So I was able to scalp another $20. And it appears that this is all going to be choppy right now. So I think I'm done trading oil for the week. But if I toggle over to the trade tab, since entering the trade yesterday, I did manage to profit a little over $300 in the futures market. But I still have the option contract open, and that's still pulling in $152. Now, I find it interesting that I was able to profit more out of the futures than the option contract. But I think this will change as price continues to fall, and I think the value of the premiums will increase at an exponential rate. So I think as price drops, the rate of return increases. But right now, it's half of what I made from the futures trade. So, yeah, something to know, I guess. But anyway, I'm going to end it here, and I'll pick it up next week where I may or may not get back into oil. I think I will. But for this week, it's a wrap, and I'll take the $300, and I don't know. We'll see what's out there. I'll look for another trade setup. So until next time, see ya.